Said Red Robin.
All right. A one, a two, a 1, 2, 3. Start spreading the news. I'm leaving today. I want to be a part of it. New York, New York. Let's go, Knicks, baby! Let's go! Knicks for 6, baby! Action Brunson to the chip! Bing bong! Happy life! Let's go, Rangers!
Rangers be out here too. I wish it was the Islanders too, but Rangers, let's go.
Hey!
Let's go. Go New York, go! Go New York!
I don't even know the
Go New York, go New York, go! Say go New York, go New York, go! Say go New York, go New York, go! What? All right, guys. All right.
Let's go, baby.
Welcome back.
Episode 29. Wow.
Almost-
Holy shit.
Almost that
The
dirty
Knicks
30.
are doing great. The Rangers are doing great. Life's great.
Life is
Life's great, right?
Life is great.
Lexington's great, you know?
New York's ahead. We're all ahead.
That's true.
I might be an
That's
Islanders
true.
fan, but
Giants
let's go
got,
Rangers. baby.
Giants got a new receiver.
Hey, I even show love to the Mets once in a while, you know? When they're doing, when they're having a good season.
I'm a big New York fan. I never really got the division between the two teams. Like
Yeah.
that.
You know what it is to me, like the Mets, Islanders, and Jets fans. There's just something about
Those
them.
are the
There's just
Island
something,
fans.
there's something about them, dude.
We're big underdogs.
I'll give you guys that you're gritty and that you ride for your team and that you're loyal, and I appreciate the out of that.
We like our
But there comes a
underdogs.
time where you got to start winning too. You know what I mean?
Always grew up taught to be. You want to be the underdog.
I agree.
You want to be the underdog.
But the underdog also wins once in a while. You know?
Yeah.
Like, come on, Jets. It's been since 1969. We gotta do
The
something.
name with curse.
Yeah.
The name with curse.
Mark Sanchez was the last one to take it to the championship.
The butt fumble.
The butt fumble.
That's your boy.
That's my dad's boy. Eli.
Back to blue.
Back to blue.
Yes,
But
sir.
besides the point, welcome back to
Steelers.
Let's Talk About It. No Steelers, get out of here.
You're yellow.
But welcome back. Episode 29, Let's Talk About It. Without further ado, my name is Thomas McCauley, your head of partner relations, and to my left I have...
Frank Grizzly Lalando, the CLO.
Frankie D, CEO.
Appia Fargaletti, Director of Banking Relations.
Partner.
Howdy.
And now... Once again, introducing the number 1 team in the world, Lexington!
And the crowd goes wild for
go, baby!
God, it feels good every time.
The fans, the clients, the customers, our parents, all our loved ones.
Everyone's wild.
They're going crazy for us.
Oh, man. The partners.
But happy episode
partners.
29, guys.
They do go crazy for us.
They do go crazy, but they're definitely big fans of us, and we're big fans of you guys as well. We always show
Absolutely.
love to your businesses, and we appreciate that you show love to ours, and I think it's a good synergetic relationship. But let's dive into today's episode. Today's going to be all about Let's Talk About Merchant Cash Advance.
Long overdue.
It's been
It
long
is.
overdue.
It really has been.
It's been long overdue. It's definitely the most financed product right now in the alternative financing space. So I'm going to just dive into the origins of it first, and then I'll kind of talk about a little bit of like the definition. I'm actually going to start out with the definition. So the definition of a merchant cash advance, it's not a loan. So please don't call it a loan to a client, to a partner. It's technically considered a purchase of a business's future receivables, okay? And what we mean by receivables is we mean that their future sales, their future business. That's what the funding company is purchasing. They're purchasing the company's future sales, and they're paying them back on a daily or weekly remittance schedule based upon that. And now the origins of merchant cash advance and why they're on a daily or weekly remittance and why it's a purchase of the sales and receivables of the business is because it was origin through credit card processing at first. So there was this lady, her name is Barbara. She owned a preschool / daycare center. She thought of a cool, crazy idea to somehow get funding through her receivables, right? Her credit card sales, and then her and her husband came together and ended up making a company called Can Capital. They named it something else at first. It wasn't Can Capital at first, but Can Capital is the pioneer of our industry. This started out in the early 90s, and obviously they're one of the biggest players in our space today. They're a big, well-known A-paper lender, go out 18 to 24 months, have really good rates and terms. Great partner of Lexington's. So they thought of a cool, crazy idea. Started with the credit card processing, like I said. On deck, then brought in, once they went public, they brought in allowing it to be ACH'd in and out of a bank account, which made it a lot more easier for the business owners because it was a specific like percentage a day, and it was getting a little confusing to kind of like keep track of. So your daily payment could have been like one day 200, one day 300, one day 150, one day 175. It was all depending on your credit card sales for that day. So I think now that now that they
Saturdays are
have
happy days.
exactly. So now that I think that they have a set schedule on it, it's a lot easier for the merchants, the clients to really understand what it is that they're shelling out on a daily or weekly basis. So that's the origins of Merchant Cash Advance. Just a little fun fact for you.
It's really interesting.
Yeah, no, it's pretty cool.
No, I like the actual because I never heard the origin story about Barb.
That's Barbara.
Awesome.
Yeah, she was looking to expand her daycare. Couldn't get funding otherwise. Need to figure out some other alternative financing product.
She's still involved in the company, do you know?
No, they ended up getting bought out, and that's when it got turned into Can
Good for
Capital.
them.
Oh, wow.
Yeah.
Good for them.
That's
Yeah.
right.
They definitely expanded their daycare. After
Yeah,
that.
absolutely.
So like you said, back when it first started, I wonder, because I know nowadays with Merchant Cash Advances, they don't pull from your account on the weekends, right? They're not on Saturdays and
Correct.
Sundays.
Yep, it's 5 days a week, and it was 7 days a week back in the day.
It was 7 days.
Yeah,
So back when
yeah.
they were Saturdays were really hefty days. They didn't get a break on Saturdays.
Correct. They definitely did not get a break. The reason, obviously, why they can't do it now is banks don't ACH on the weekends. So that's really the biggest reason why. But credit card processors, they're 24/7, 365, weekends, holidays, all that.
Out of curiosity, if in that time you didn't operate on the weekend, so there was no credit card being processed, would they be able to take a percentage of it, or would that be a negative?
I think what they would do in that situation is that's something that you would have to tell the lender on the upfront, and then they would kind of average out what your weekly sales were, and then kind of break down the daily payment from there. So I'm pretty sure that's how they went about it. One more thing that I wanted to bring up, and don't hate on me, Can Capital, for bringing this up, but they actually attempted to patent the Merchant Cash Advance product at first, and then a couple guys like ourselves came together because this guy David Golden, who owned a very big brokerage just like ours back in the day, was one of the first brokerages out there. He decided he wanted to become a direct funder. And you could see his video and his story on DBanked. If you just look up the David Golden story, it's really cool. He's pretty much the pioneer of the industry as well on the brokerage side. And basically, he wanted to become a funder. He did the right thing, went to Can Capital, let them know, like, hey, I'm looking to do this. And he was their best partner at the time. They didn't really say much to him at the original meeting. Eventually, he got a lawsuit slapped on his desk like that next Monday.
Wow.
Yeah, so they were suing him for the patent rights of the Merchant Cash Advance. And then he basically got together a bunch of lawyers and a bunch of other people in the industry, so other big brokers, so like other owners and stuff like that who had a good amount of money, had some capital, and they fought Can Capital, ended up winning. The court case took months. He was flying out to different states. I think it was in Texas. He had to fly out to Texas, and he was in New York at the time, weekly or monthly or whatever the case may be. Ended up winning the court case, and if that did not happen, I mean, we could possibly not be a thing. Can Capital could have had a stronghold on our industry, possibly, and possibly David stopped a freaking monopoly from occurring. So I think that's really cool stuff, cool history.
That is really awesome.
Go David.
Yeah, go
Thank
David.
you, David. I appreciate it.
We
Good guy.
appreciate you.
And thank you, Ken, for inventing it.
Yeah, it's true. Shout out Can Capital.
Yeah, we
Yeah,
like you.
and like one thing I always think about too, I think about it honestly pretty daily, is what did businesses who couldn't qualify at banks do before
Suffer,
the
I
existence
think.
of
Go to Tony
cash
Soprano.
advances?
No, yeah, there was. Yeah, I mean,
Yeah,
you could go to
yes.
Tony Soprano, or I mean, there was personal loans back then, so you could get a personal loan from your bank, and there was like a little bit of some online lenders coming out. I wouldn't say in the '90s, but probably like the early to mid 2000s, online lenders were coming out. So really, there was really nothing. I mean, you know and I know it. Before we all came into this industry, we all thought that the only way you could get financing was through a bank.
Yeah.
And every business owner, I'm sure, assumed the same thing. So, shout out Barbara for creating a really cool product.
Yeah, that's
I
really
agree.
crazy.
Yeah.
I agree.
Hard money's always been a thing, but this is at least easily accessible,
Yeah, very accessible. And, to touch on that, Grizz, the cool thing about Merchant Cash Advances and why business owners seek out them is because it's unsecured. It's all unsecured funding, so you don't have to put up any sort of collateral to the lender. It's flexible funding, right? It's something where you could get funded within 24 hours. So typically banks, I mean, we've kind of figured out some tips, tricks, and hacks with banks to get funded within like a week or two. But back in the day, especially when they didn't have as much technology, it was a lot slower to get funded by a bank. It could take 30, 60, 90 days, depending on the product they were getting. So it's something that could be money in your bank account, ACH or wired within 24 hours. And another thing too is that there's always early, not always, but more times than not, there's early payment discounts associated with the Merchant Cash Advance. So if you have like a shorter term project, maybe you're flipping some sort of inventory, you're hiring some employees that are going to churn over and make you some profit coming up very soon, it is a good product for those situations and scenarios.
Absolutely, and industries too. Some industries just thrive with them. an opportunity arises, that there's an opening for a new building for a restaurant, or
Yeah.
there's a piece of equipment that just went on a lot that they need money tomorrow to buy it. Like that's
Yeah.
the only program that is ever going to be able to get you the money that quickly.
That's true. And the industries that merchant cash advance lenders like are ones that banks don't like. So people like retail, people like restaurants, trucking, even though right now the economy is bad with trucking, so they're not the biggest fan of it. But in the past, they were big on it. They were very bullish on it. Construction, mostly specialty construction. Those are the biggest industries. Obviously, they love medical, because who doesn't love medical? Banks do love medical as well. They love manufacturing. Banks do love manufacturing as well. But obviously, those are good industries to fund, so MCAs like them as well. They even fund cannabis. They'll fund lawyers. They'll fund property management. They'll even do auto sales. They don't give out the best deals to those kinds of industries, but at least they're willing to give the funding to these clients and willing to help them grow their business if need be.
Gas stations too, right? That's like
They'll do
another-
gas
yeah.
stations. Yeah, banks hate gas stations.
Auto repair.
And especially auto repair. That's a great one.
Auto repair.
Gas stations, especially banks hate. And the biggest reason why they even hate them, especially right now, is I don't think there's like much of a future with them. So giving them like a 5 to 10 year loan is a little bit scary. It's like a bank, in my opinion.
Yeah.
But yeah, anything where receivables are coming in constantly every day. So for instance, like a restaurant, say you have 10, 15 tables in your restaurant, the average check is, say on the low end, $50. You know what I mean? That means you have $50 coming in 10, 15, 20 separate times, deposited daily into your bank account. So that's why it's going to be a lot easier for those people to cash flow fine and be able to have a daily or a weekly payment. And there's some industries that it just wouldn't really make sense for their cash flow. They need to work with a monthly payment. So
One thing I do really love about this industry and the cash advance space is how little people really know about it. So when I'm talking to people in person, or I'm talking to my friends, my family, other business owners, they're so confused by the idea of it. They don't even know it's a thing.
Yeah.
So when you're able to break it down, they're like, that's insane. Like, you can get money in 24 hours like that.
Yeah.
Unsecured, you can go do whatever you need to do with it with your business. Like,
yeah,
people don't know about it. Like you said, I didn't know about it.
yeah, I
So
didn't know about it.
it's a booming industry, and it's only going to get bigger from here.
It's true. Documents are light on it. Only an application and 3 to 4 months of bank statements, depending on your state. The states that do need the 4 months, do you know, Tom?
New York, Florida,
California, Florida,
Utah.
Georgia, Virginia,
Utah, right?
and Utah.
Yeah.
Yeah, those are,
Isn't Massachusetts, or are they coming into it? I
no,
think I
they
read
might
something.
be bringing out some
Yeah.
disclosure laws soon. Another cool thing is that the industry is getting regulated, so a lot of disclosure laws are coming out. It's really weeding out the bad brokers who kind of lie about the terms and the factor rate on it. Bringing that up as well as merchant cash advances are not based off traditional APR, annual percentage rate. They're based off of factor rates. The easiest way that I could explain a factor rate to the audience is that it's just a one-time set cost of capital. So for instance, if a lender gives you a 135 factor rate, that means in essence you're paying 35 cents on the dollar for that set period of time. So whether it be a year or 2 years. So for instance, with a bank, if you get 15% APR and it's a 5-year loan, it's 15 times 5 because APR compounds. If you get a 24-month cash advance and it's a 135 factor rate, you're just paying the 35 cents on the dollar throughout the 2 years. So it would technically break down to be 17.5 for the 2 years. So that's cool. It doesn't compound. So that's just another thing to keep in mind. It's based off of factor rates, not APR.
And like you said too about the prepayment bonuses,
Yeah,
that are
they're
very,
huge.
very commonly there.
Yeah.
Humongous.
Oh, yeah.
Especially if it's a quick turn on investment, it's
Yeah.
like a no-brainer. Like, why wouldn't you do that?
A lot of lenders could be just as competitive as banks with the early payment discounts, and even without the early payment discounts. I mean, we've gotten factor rates as low as a 108. You know what I mean? We sell 1.10s to 1.25s all day long,
Yeah.
and without having to put up any sort of collateral, right? Being able to sleep at night, not providing any sort of documentation. And like the thing is about business owners, we understand that your accountants get savvy, right? Not everybody wants to show profit on their tax returns, and typically when you go to a bank, if you want a longer term product, you
They
need
wanna
to
see a
profit on your tax returns. They want to see a nice profit. So more times than not, we understand that you guys don't do that, especially if you have S corporations. We understand, we get it, but then that kind of just takes away some traditional financing from you, unless you work with a company like Lexington who knows some like tips and tricks and some ways to get around it with the traditional banks.
We got a product for that.
Yeah, we definitely do.
I run into that on my side of things all the time, where if I'm collecting somebody's tax returns and they have a great accountant in their eyes. They don't want to pay Uncle Sam.
Yeah.
Makes things a lot more difficult.
Makes things a lot more difficult, and like it makes total sense. I mean, if you go to a bank and you're showing you're basically the bank, they're not able to go to your brick and mortar pizzeria, right? They're not sitting down and evaluating your pizzeria for 1, 2, 3, 4, 5 weeks, right? The only way that they could evaluate it is based off the documents that you provide, and then that's going to be your tax return. So at the end of it, if you have X amount of income and you have X amount of expenses, and the expenses outweigh the income, and you took a loss, technically to the bank you're not profitable on paper, right? But with your bank statements could be a whole other different story, right? You could be doing 30, 40K every single month, cash flow very well, have healthy deposits, have healthy balances in the bank account, and then the lenders are willing to fund you. So it's definitely a whole different dynamic. You could think of the merchant cash advance, you could think of the bank statements as what the tax returns are for a bank. So they're dissecting the bank statements. It's the only documents that you need. You're just dissecting those bank statements. Things that they're looking on those bank statements, they're looking at average daily balance is going to be the most important thing. So that's how much is in your bank account at all times on average throughout a month. So for instance, on the first of the month, maybe you have 5,000 in the account. On the second, you have 4. On the third, you have 200. On the fourth, you have 600. On the seventh, you have 9,000, whatever. And then at the end of the month, you average it out like we learned in middle school, right? And it equals $5,000. That means you have an average daily balance of $5,000. And typically what a lender will do is that's the weekly payment then they will think that you could afford to have. If you keep $5,000 in the account, we could probably afford to give, this X business 3, 4, 5,000 of a weekly payment. They could clearly afford it. They're looking at negative days. Obviously, negative days are a complete no-no. There's some lenders that do work with it. Most don't. They don't want to see it, as well as not. And that's if your bank account's negative for like just a 24-hour period. If you look all the way down at the end of your bank statements, and there's like, you're going to have your average daily balance there. And if you see a negative $34 or something like that, that's a negative day. Non-sufficient funds, they're not a fan of. So that's basically, you might not be negative for the whole day, but maybe you have $100 in your account and one of your vendors charge you $200.
Yeah.
That's a non-sufficient fund. So that's something that they don't like either. They're a little more lenient on the non-sufficient funds than the negative days because maybe you just didn't account. I mean, we have companies rip money out of our accounts all day long. Like Grizzly calls them up, buddy, it's your quarterly bill. All right, whatever. So they understand that happens, but still very, very, very important. Obviously, they're looking at how much deposits are going into the bank account, and they're looking at how many withdrawals. They're going to like a company that has a lot of deposits, right? So a company that maybe only has 1, 2, 3, 4, 5 deposits is not going to be as favored as somebody who has 25, 30, 40, 50 deposits in their bank account on a monthly basis.
And that's even if like they're big deposits too, right? They'd rather see the quantity rather
absolutely.
than the quality.
If somebody does 50,000 a month and they have 25 different deposits, they're going to like that more than somebody who does 100K a month and has two deposits.
Yeah.
They're not going to care because the thing is, at the end of the day, you're relying on those 2 deposits. If one of them goes, or God forbid both of them goes, you're out of money.
Yeah.
Which is where auto dealerships have a hard time with, correct?
Yes, that is why. Because if you think about it, a lot of them do great revenue and they do 2, 3, 4, 500K a month, but one car could be 50,000, 20,000, 30,000, 40,000.
Have an off month, you're down 200K.
Yeah, exactly. 100%. And it's hard to collect on them too. And that's the biggest thing as well, is being able to collect on those receivables. If they deem that you could be collected on the receivables very easily, you're more you're more lendable, right?
Yeah.
A lot of these car dealerships, they have flooring companies that are
That's the big key
financing all of their cars.
That's
as well,
the big
and
key
holding
too. They
for
technically don't
CCC.
even own their assets. Is the big problem. So that App, you brought up a great point. That is the biggest key.
So I guess in essence, like a used car dealership where they own the cars might be more favorable than
They still don't. They still work
most
with
of those
flooring
guys don't
companies all
own
the
their
time.
cars.
Still, wow.
Yeah, most of
wow.
those guys don't own their cars.
I would argue that new dealerships, I mean, those are more loaned directly from Chrysler.
Gotcha.
Right, but these a lot of these used car dealerships, they're doing 4, 5, 6, 10, $15 million a year, but they're also working with three different flooring financial companies that are financing up to $1 million of almost a line of credit for them to just purchase this.
So it's like their
inventory.
future receivables are already purchased to a degree.
Yeah, it's by
Yeah.
somebody else. Exactly. So it's hard to
Wow.
collect. It's hard to then collect on them.
Yeah.
Exactly. Another thing to talk about that's cool with the MCA space is that there's different tiers to lenders. So what's weird about this and what's hard to like kind of teach to our sales team, especially when you're new and you're starting out, is we tier our lenders by A, B, C, or D. Okay, if you Google A lender, B lender, C lender, or D lenders, or tiers of lenders, the mortgage industry is going to pop up on Google or Yahoo or Bing or whatever the case may be. It's not like it's an unset rule. It's just like our industry's so new. It's that like nothing's really ever been like put together saying like, hey, these are the A lenders, these are the B lenders. So basically, like the
Whoever
company
does the most advertising.
So we kind of have to just tier them out ourselves. So basically, like the way that we tier them is that A lenders, they go out, they have longer terms. So they'll be anywhere from like 12 to 24 months, right? And some go out 36 months, and that's going to be our A paper lenders. They're typically going to give a little bit cheaper rates at times, but the term is really the most important thing. B paper lenders are probably going to go out anywhere from like 6 months out to 18 months max. A B lender, it's really probably like 15 months a B lender will go out to. A C lender is going to be anywhere from that 6 months to 12 months max, and it's really between like 6 and like 9 months. And D paper lenders could be anywhere from like 30 days to like 3 months is like really where you're going to be at. And obviously, the lower you go on the totem pole, more likely that the factor rates are going to be more expensive. So it's really more keen on term is how we tier the lenders.
Absolutely.
Yeah.
Absolutely. And that's one of the biggest advantages for other, up and coming broker shops or independent brokers who are maybe partnered up with a few lenders. Like you were saying, it's easier to partner up with the lower tier lenders if you're not doing much volume. And that's where marketplaces like us really come in to help is, partnering with us, you're going to have access to a whole nother echelon of lenders.
Yep.
Where we know all their guidelines, we know everything about them, what's going to fit where, and we're going to be able to get your deal funded infinitely easier than you would have been if you were just trying to shove the more expensive position in front of them.
Something about shoving those more expensive positions is, there's a lot of people who claim to be, brokers really out there in the industry. And when you come into terms of labeling A, B, C, and D, this one broker that you might be working with might only have C and D lenders, and they also might be they might have all the lenders, but they still make more commission on that C and D. Yeah. And so they shove that D or C down your throat, which then also stops you from being able to get your A and B lenders, because no top tier lender is going to come behind come behind one of those harder lenders.
That's very
as well.
true. Abby brought up a great point. So, for instance, we had the situation before. Corey got in a file the other day. It was somebody who he actually went to a local brokerage shop. There was just 2 guys working at the company, and they ended up getting them like unique funding and somebody else who were like just known C paper lenders. And the guy had 700 credit and was in business for 12 years and was in the restaurant industry. Wow. And that's somebody we could have easily got a nice on deck offer, a nice credibly offer, a nice mulligan offer, right? The problem is, it's like once somebody now has a C paper lender, they have to pay them off before an A paper lender is going to want to then come in and mess around with them. Moral of the story. So, for instance, if somebody gets Biddy, first, on deck will never want to come behind that, because Biddy is a C to B paper lender, depending if it's big Biddy or core Biddy. If somebody has on deck Biddy, forward finance, expansion, they're all chomping at the bit, to get that second position, but behind on deck, right? So it's very important to, make sure that you're getting your clients the better lenders at first as well, because if you want to fund them multiple times, you're not going to be able to if there's only so many times lenders will come behind other lenders, right? So you kind of got to really, really be wary of that.
Only so much AR to purchase.
Yeah,
it's true.
And in some situations too, if I'm not mistaken, some lenders will see the position that you have, be willing to pay it off, and put more on top of it, correct?
Yeah, that definitely happens from time to time, no doubt. Yeah, some lenders are definitely want to buy it out, but I'll tell you one thing: on deck's not going to buy out a Biddy position. You know what I mean? Not going to happen. A great B paper lender would love to buy out an on deck deal all day long, but that's also stuff that we know. Not all lenders do buyouts, right? Yeah. So that's stuff that our processing team knows, our management team knows, our closers know. They know each lender's guidelines by the back of their freaking hand. That's something that you need to teach your team if you're not doing that. It's one of the most important things that you need to do. Like our closers will get on the phone with somebody and they'll start talking to them, and like a lot more times than not, when you're selling merchant cash advance, you're going to be in competition. So somebody will be going over the terms and the rates that they're getting, and then they already are able to spit out who they have that offer with. Oh, you have that with Lendini, right? And then the client's like just wows and amazed that Corey, Ryan, Matthew, they're such experts in their field that they already know what lender they're getting that offer with. Yeah. So that's all very important stuff. You got to know the lender's guidelines. It's so important. You got to know them like the back of your hand. All prepayment discounts, all stips that are needed on all deals at all times. There's times where like a lot of lenders will start requesting tax returns or financials maybe at a certain dollar amount. A lot of them are 100K or 250K. So we fund deals all the time at like 99K, and the lenders are cool with that. So that we don't have to provide some sort of financials, because typically someone who's taking out a cash advance probably doesn't profit on their tax returns. They probably just cash flow very well in their bank statements.
One thing I wanted to talk about too, when you were saying before, like the C and D like lenders, and like you mentioned, like expensive, like just because it's expensive, like doesn't mean that it's not a good product for them either. Like
100%.
like everyone, like there's a negative connotation, like, oh, like it's expensive, but there's an ask for every seat.
That's
you
true.
know, like you could take a higher factor rate, but that doesn't mean that you're not going to take that and flip it 3 times over, pay it out, and be in a way better position than you were.
Yeah.
Get early payoff benefits.
Yeah, early payoff benefits, whatever it is, like there's an ask for every seat. That one loan from a DC paper lender could propel your business, and you might only need it one time. There's so many different options out there. Everyone's in a different position. So like just because it's more expensive doesn't mean it's not a good product.
So yeah, you're right. It's all about the opportunity at hand that the business owner has. Let's be real. Most business owners, say I keep bringing up the pizzeria example, right? How much do you think it costs to make a pizza pie? Less than a buck,
$2,
$1,
yeah.
$2, right? What do they go and sell it for? They sell it for $18 to $25, $30. So it's all about the return on investment, what you're looking to use the funds for. And that's something that we do is like sometimes the MCA just doesn't make sense for a client, and we'll just straight up tell them, right? The problem with a lot of other brokers is they're trying to make the MCA make sense when it's just not. Like this guy only has a 10% profit margin, and you're trying to sell him a 125 factor rate. Like the guy's going to literally lose money. That product just doesn't make sense for him at this time. So that's something that we'll dissect, we'll dive into, and if our team feels that that's just not the right product for him, then we're going to just straight up tell him that. If his credit's not there to get a traditional financing product, then it just comes down to let's get your credit up, let's revisit this. If you have an opportunity where you're making more of a profit margin or you're flipping the money a little quicker, then I'd say that the merchant cash advance is going to be a better product for you. But like you said, Grizz, it's just all about the opportunity. If you can make X amount of a return on this investment, then are you not going to take the new opportunity with your business? There's opportunities to grow every single day. You could be getting the job of a lifetime, but you got to bid on it by tomorrow, right? You never really know.
That happens all the time.
Happens all the time. Happens all the
24
time.
hours.
Flip some inventory. You're getting this at this price. But have to buy it. Today. Your vendor calls you up. I'm willing to do this today, this week, whatever the case may be. There's no other financing product that you're going to be able to get within a week.
Yeah.
Merchant cash advance is the only one.
And I'll tell you, it happens all the time with my process in the bank room because my process isn't 24 hours. It's not a week. It's 2 to 3 weeks, sometimes 4. And people, whether it's right in the beginning, they for some reason thought it was going to be quicker financing, and so we ended up having to do both programs simultaneously. Or somewhere midway through the process of getting our bank loans and our lines of credit, something pops up. And they need it. They need it that day, the next day, and so we turn it around right there. We already have great report built. They've already checked us out, checked out our reviews. If you're ever going for a merchant cash advance, always check the company's reviews that you're working with.
Yeah, please do. Please do.
That is huge.
We're gonna get into it a little later, but it is an unregulated industry, so you just do have to be very careful that you work with. I want to just tie into what you were saying before, Appio, and that's why it's really beautiful that we offer traditional financing as well as the merchant cash advance product and alternative products, because the thing is our clients are then gonna. The thing is, if we're bringing them into our traditional program, we always let them know what we offer, right? We're not just going to sit here and say we only do bank loans, right? We offer equipment financing, we do term loans, we do SBA, we do merchant cash advance. So they know what we have on the upfront, obviously, especially when our sales reps on the first initial discovery call with them. But they feel that much more comfortable taking out the merchant cash advance with us, and they know that we're being upfront and honest with them because we're doing right by them in the first place by if they qualify for better products or program, we're getting that for them and we're getting them into traditional banks. So like Appio always says, there's an ask for every seat. A merchant cash advance, it's for some business owners, it's something that you need once a month. For some, it's once a year. For some, it's once every 5 years. But at some point in your business, you're going to need money by tomorrow. Yeah. It's definitely it just happens. You know what I mean? So you want to make sure that you're dealing with a very trusted source. Very, very important. Tom, can you talk about how our industry is unregulated and
before we get into that, if we could I'm just going to piggyback off of it. Another thing that I love about the merchant cash advances is that so few of these lenders report to business credit.
Oh yeah, it's huge.
So you can get yourself a merchant cash advance, and it doesn't affect other loans that you're going for. Yeah. Maybe besides an SBA, because the SBA they ask for so many documents, so many documents. But also, the SBA will come behind and do what they do. But you can go for our traditional bank lines of credit, our traditional financing, and our banks. We know which lenders do and don't report to your business credit, so we know that we can still get you that traditional financing at the same time, and it will have pretty much zero effect to your approvals that you get on both ends.
Correct.
Yeah. What do you want me to talk about?
I wanted to just talk about that it's important to work with a trusted funding source because it's an unregulated industry. So especially
like you said, unregulated industry, and the fact that these loans are so quick, if you're working with the wrong person, you can easily be put into a situation that you were not supposed to be in.
Yeah.
Again, with these processes, we have the ability to to tinker with the rate. You know, if it needs to be a little bit cheaper for it to make sense for you, no problem. We can make that happen. Some of these people will say X and give you Y, and that's not what you were expecting. And then before you know it, you're already tied into it, and you can't do anything about it. Not to mention even that there's some companies that will say, hey, you know, we'll get you this, and then we guarantee you this afterwards, and then you never hear from them again. So there's, I mean, just like any industry, there's a lot of bad apples that roam around, but being that it's unregulated, like Appio said, it's extremely important to look into who you're working with. For my side of things, the partners love it. You know, they search up our company, they see our Instagram, they see our YouTube, they see our content, they see us having fun in our office. It's honestly, it's kind of heartbreaking to hear a partner talking about a client. I had one recently sent over where they told him that same thing. They were going to get him guaranteed a different product after he took out these 4 positions, and then they charged him a $10K origination fee. And he got
disgusting.
Toasted.
Disgusting.
Horrible. Granted, he didn't, God bless, he didn't default on any of them. He was still making the payments. We actually helped him out with our
That's a man.
With our Lex. Yeah, he you know, he got put in an unfortunate situation by a extremely uncredible person in an unregulated industry, which is why companies like ours and the people who work in our fashion with transparency and honesty are really going to be the forefathers and the pioneers of this industry, because we're going to push it forward and be the beacons of light in all the darkness.
We want this industry to get regulated. We're pushing for it. We work very closely with the SBFA, the Small Business Finance Association. And we're always pushing just to get this more regulated, for more rules, laws to come out, because ultimately with the more disclosures and stuff that come out, it's weeding out the bad brokers, like I brought up before. And I'm just hoping to get them all out of the industry eventually. Like, obviously, like the people who are doing good, you know, we mess around. They're our competition. We talk shit about them and stuff like that. But there are other good people besides Lexington as well who do what we do. So it's just important to get the bad eggs out. We got to get this thing more regulated. It's important, right? And I think that it's going to get done within the next decade. We'll definitely get way more regulated. I mean, year by year, you know, more stuff's coming out. Each state's getting disclosure laws and stuff like that.
As
so
silly as it may,
it's good.
As silly as it may sound too, like you kind of judge who you're going to work with by how much they advertise. You know, like we put ourselves out there. We would not be doing that if we were doing anything crazy. We like, as Tom was saying, you know, like we're advertising on Instagram. Like, come check out how funny we are.
We make podcasts.
We make podcasts. We're literally putting ourselves out there. Like, we're looking to do good by our people. We're advisors at the end of the day. You know, as you said, like we will put the offer in front of you and tell you why it will work, why it won't work, and, you know, set you straight. As, again, other people, the person who's not going to tell you why it won't work is not advertising. I'll tell you that for sure.
And I mean, too, like when it comes down to, and everyone starts somewhere. But when you're getting emails from a company that you can't find on Google and they don't have any templates or contact cards or pictures of themselves at all, you don't know who you're speaking with. You could be talking to a dude who's John at X, Y, and Z Capital, but his name is Steven and he lives in his mom's basement. You don't know what you're dealing with at that point. And again, everyone starts somewhere. So, you know, be true, be transparent, build your company up, import more tech, get more out there, do what you have to do. But for the ones that are just in it to make a quick buck and then never talk to the client again, you know, as a client.
And that's so idiotic too, because another thing that we got to bring up is that MCAs are renewable. So typically what most lenders will do, as long as you're keeping up your payments with the lender, is that you can renew halfway through, or sometimes at 40 to 60%, just depending on the lender. And then you can renew and then get another cash advance with them, right? And then if you're doing good, you know, your credit goes up a little bit, your revenue goes up a little bit, it's advantageous to them, and they'll give you a better term, a cheaper rate every once in a while. So it's good stuff, and especially for people like us, the people who sell it, right? There's people we've renewed 10, 11, 12 times already, and we've only been in business for 2.5 years. You know what I mean? So it's really cool stuff. I mean, there's people that we've renewed 2, 3, 4 times. So you do right by them the first time, they believe you, you're honest, you're transparent, and they're always going to get the merchant cash advance from you, and that's important.
That's another great thing that ties into with the renewals as well as the lenders tiers. You know, say you come in, your business is not exactly where it needs to be, you're not cash flowing well, your credit's not where it needs to be, but you need something quick, and you fall into that like CD paper, and you listen to our advice, which happens time and time again. You know, you go through the process, you come back to us after a couple months, everything's paid off and good, and now you're cash flowing, you did what you needed to do, we can get you to a higher tier and a higher tier, and then now you're working with the highest tier, and now you're in an infinitely better space than you were previously.
Absolutely. And when selling merchant cash advances, it's important to be overly transparent with these people. Like they need to know what you're making on this deal. You need, because the thing is that so many people are being untransparent with them, that you need to go up, above, and beyond what you could possibly imagine what being transparent is. I mean, we FaceTime our clients, we Zoom them, we're kind of showing them everything. We're showing them the ins and outs. We're showing them how the lenders work. We're showing them which lender's going to do what for them. Like, we're not trying to make 15 points on this deal just because this one lender does it, but it's a worse deal. You know what I mean? Like,
Truly educating these people.
Yeah, we're really educating these people, especially because, like, say like they were a little skeptical and they don't want to buy from us, or like they're in competition, because more times than not, when you're selling a merchant cash advance, to backtrack, you need to always assume you're in competition with somebody. They're always getting bombarded and calls from a whole lot of other people. Once creditors get a hold of these business owners' information, it's kind of game over from there. So it's very important just to what was I talking about?
Being transparent.
Yeah, being transparent. Yeah,
and quick too,
Yeah.
because you're, like you said, you're always in competition, and that's where it comes down to being a more efficient shop or financial institution rather, is the speed, the efficiency, and the transparency. They have to. That's like the holy trinity of selling.
Yeah.
You have to be on top of the client. You have to keep them informed. You have to be transparent about it, because as long as you're in front of them, telling them exactly what it is, they're not going to listen to the other birds chirping in their ear when they're talking to a damn phoenix. You know what I mean? It's like
Speed,
light,
agility.
And at the end of the day, too, it's more fun being transparent. You build a better relationship. You could go to bed easy that night.
Yeah, that's another thing. Dude.
I can put my head down on
I
my
understand
pillow
how to go
because
to
my
sleep.
guys are doing good by the businesses. And you're a business owner too. You're employing a business owner mindset to your employees when you run a company like this. So like, why would your main focus be to not help other business owners out if that's your goal?
One thing I'll say is those people go out of business very quick.
Yeah.
It might work for you for a few months to a year, but you're not lasting
You can't
much
fly
longer
under the
than
radar that long
Yeah,
in this
you
company.
can't. It doesn't even matter if you don't run advertisements and stuff like that. Like, you piss off one merchant, one person who's just willing to go to lengths and sue you and come after you, call the SEC, whoever the case may be, Consumer Financial Protection Bureau, like whoever they got to call and get it done, they're going to get it done. So just very, very important, like we keep saying.
It's something else, like coming across one of those people like in the wild. You know what I mean? Like I went, I go bowling on Monday with my dad and my sister, and like I'm talking to this dude, and he's talking to me, and he actually recognized me from LinkedIn. He's like, "Oh, I know you," and I was like, "Oh, cool, whatever." I was talking, and he just started spitting the worst sales tactics I've ever heard at me, and I was like, "Dude," I was like, "You got to get away from me.
This ain't the 80s, buddy.
You got to get away from me, dude." I was like, "I can't listen to this. Like that's horrible."
Yeah.
Like I genuinely don't know how you could go throughout your day putting people in a horrible position.
You know what it is too, though, is like some people are like, yes, that guy's probably sucks. He's older, like he should have known better. But a lot of these other brokerages actually teach their sales team to sell like this.
Yeah.
So they like teach them to lie. They teach them to be down the client's throats. And I couldn't really understand why. You know what I mean? It's not how this industry works. Maybe it's how you made it, in the beginning when no one really kind of knew about the product and stuff like that. But I'm telling you, if you want to be a long player in the game, it's not going to work. I want to talk about a little something else with Merchant Cash Advance, and that is when you first open up a brokerage, it's very tough to add on the A or B paper lenders. Typically, if you're getting on lenders, it's going to be the C or D paper lenders. Another thing as well is if somebody's calling your store, they're hitting you up on LinkedIn, and they're saying they're a direct funder, 99 times out of 100 do not work with them. Obviously, you should be reaching out to the funders for their business. They should not be reaching out to you. That's pretty much a telltale sign of that they're just a bad shop. They don't have a big name, and they just should not be trusted. So in the beginning, you'll see that the only lenders you could really get on are the C or D paper lenders. It's very hard to get on the great A or B tier lenders. That's why it is important to work with a company like us. On top of it, the C or D paper lenders are way more likely to be backdooring your deals. And backdooring, just so that everybody knows, you might not know if you're just watching this and learning about cash advance for the first time, but backdooring is one of the biggest problems in our industry. So it's basically, to describe it, it's when your processing team submits a file to your lender or to multiple lenders, and then a bad seed at that lender, because usually it's not the company itself, it's usually like an underwriter or the ISO rep, is selling off the business owner's information to other brokerage shops, and they're just getting bamboozled calls all day long, saying, "Hey, I got your file, I got this, I got it from Lexington, I have your application, the bank statements here." So it's very important to mitigate against backdooring, and by doing that, it's by having the better tier lenders. Another thing as well is don't just shoot your files out willy-nilly. Like just because you have 20 lenders on your platform or even say 75, you don't send the file to all 75 lenders. I don't even care if it qualifies, right? Because if you have a guy who has 650 credit, he's in the restaurant industry, that's $50K a month. If you have 50 lenders, he probably qualifies for frickin' 40 of them, right? But that does not mean you send it out to all 40 lenders. You need to tier your lenders out in, like we talked about, A, B, C, or D. So you're going to send that to your first tier of lenders. So if you have that exact scenario, I'd say you're probably just sending it to about 5 people. You're going to wait, 1 to 3 hours, see what they come back with. If 1 or 2 of those people give you a good offer, it's going to be better than what the B tier is. So there's no point to even sending it out to the B tier. So you're basically mitigating your chances of this shit going backdooring. And I'm not going to sit here and say that Lexington is completely free of backdooring, right? It could just be one bad egg and one bad seed. It's something that you're just always going to have to deal with in your industry. But the more respected you are, the bigger name that you have, the less likely that's definitely going to happen. And I'll definitely say for one that it happens to us barely ever, and it definitely used to happen when we first started. I mean, we had no credibility, we had no name, like people didn't really care to do us dirty. Funders didn't have the respect for us back then and stuff like that. So it's definitely really hard nowadays coming up in the industry. I definitely feel for a lot of brokers trying to break through the glass ceiling. We actually got very lucky, honestly, when we started. Another big thing is that these lenders are now bumping up their requirements to even get on. Like a lot of lenders like On Deck, Can, Credibly, you need to be in business for 5+ years. You need to fund X amount a month. You need to prove that. You need to give them 6 to 10 different A-paper lender references. They need to speak to your ISO rep from each shop. So it's way harder than it ever used to be to get on the better tier lenders as well. So that's why, like Tom said, it is advantageous for you to work with a good high-end marketplace or broker at first to help break you into the industry, teach you game, and just kind of, just help you grow day by day.
Some will even want to meet you in person.
Yeah.
Yeah.
Well, yeah. I mean, whenever we sign on a new lender, we always invite them to the office. I think it's very important to build that in-person relationship and feel, and that's why Sean Murray, shout out Sean Murray, he runs D-Bank. That's the biggest news source in our industry. They're like the Wall Street Journal of merchant cash advances and alternative financing. That's why he throws the broker fairs about 2 to 3 times a year, Miami, New York, sometimes California, sometimes Canada. He does it. Yeah, they've had a Canada one. Yeah, they've had we have Canada lenders. We should dive into that in a little bit too. But he does that because it's important to meet these people one-on-one. We've noticed that we'll go to an event or the lender will come to our office and our business skyrockets with them just right after that interaction. It's not even necessarily like the funder went back and was like, hey, make sure you're on Lexington stuff. We got to do better. It's just the relationship. It just got better. We wanted to push them a little more. Maybe they wanted to push us a little more. Whatever the case may be, like it's just kind of how stuff's worked out. So that in-person feel, it's very, very, very important. We always invite our funders over. Our best funders are here 2, 3, 4 times a year. Our best funders are here every quarter. We're taking them out to Insignia. We're taking them out to ball games, hockey games, you name it. We do it together. It's important for that in-person feel, and that's why they do run those broker fairs every year. Very important, especially if you're new in this industry. Go to the broker fair.
Yeah,
biggest event out there for our industry. Very important.
Make the relationships.
I'm sure it's so cool for a lender too, especially ones that we've been working with for some time to see our growth, see where we are now, and
they're dying
come
to
into
see
the
us.
office and they have a bunch of fun because we're fun.
We are.
We have a great time.
Yeah.
All right. Lender here or not, we're doing cartwheels. All right. We're having a good time. We're laughing. We're joking. It gets rowdy. It gets loud.
It does.
People are calling. People are talking. People are running around. Like it's.
I mean, we had the D-Bank team here last week interviewing.
They're cool guys.
Yeah, they're very cool guys.
That was a lot of fun.
Shout out Johnny. Shout out Keith. Interviewing the team over here, and they said that this is the most. What's the word I'm looking for? Energetic office, definitely most energy, just everybody's just always on go, somebody's always on the phone, you know what I mean? So definitely gives you a little Wolf of Wall Street vibes without the screwing people over.
I was talking to Keith, he's like, we're going to film over here. Can we get it a little quiet here for 10 minutes? I'm like, no.
Good luck, buddy. Like I could tell them, but then they're not going to listen to me.
This is Martin.
Hey, it's Martin.
How you doing, Mr. Sanchez?
Mr. Sanchez, you told me to follow up with you in 3 weeks.
Come on.
How's the restaurant business doing, Mr. Sanchez?
I love Marty. Shout out to Marty.
Shout out Marty. Burn. When you're selling merchant cash advance, it's important to be confident. In all sales, it's important to be confident. Important to project your voice, conviction, believing in yourself, believing in the product. Believing what this can achieve for that business owner. And the biggest thing about selling MCAs, it's all timing, guys. It is all timing. There's people who will tell you to F off 2 weeks ago. You follow up 2 weeks later, and Frankie, I need money. Like nothing ever happened. And I like to tell the guys, it's like, because I'm a small business owner too. We go through stuff, right? The guy could have just stubbed his toe on the job, right? You call him at the wrong time, he's going to tell you to F off, right? He gets served papers, you know what I mean? Because he's getting sued, and you're calling him, "Hey, it's Johnny from Lexington," you know, and he's gonna tell you to F off, you know what I mean? But you can't take what these people say to heart all the time, right? These are the most grittiest people in the world. These are the people who make our economy go around. They're people just like your fathers and your mothers running businesses. That's how you have to imagine these business owners who take out merchant cash advances. They're typically people who have under 50 employees. They're small, by definition, small business owners. So never take what they say to heart. Know that it's a timing thing. You just always need to reach out. You need to just data gather, data sift, right? You need to build a pipeline of people who have qualified revenue, have a qualified credit score, cash flow, you know, very well positively, and maybe even have like an A or B paper lender in their bank statements that you're aware of. And those are good leads to just always stay on top of. A lot of people in the beginning, sometimes they'll waste their time on, and I'm not saying anybody's a waste of time, but this is like from a selling aspect. Merchants that do 5, 10, 15, 20,000 in revenue, when you should be building your pipeline with people who do 30, 40, 50, 60, 70, 80, 90, 100,000 plus in revenue. Those are the people they should be building to your pipeline and following up with constantly every week. And like we say, this product's not something meant to buy today or tomorrow, right? There's a time and a place for the product. So that's why it's an all timing thing.
And be a person. You know, add your personality into it. These people are people too. And every follow-up, it doesn't have to be about app and bank statements. You
it doesn't have to be about a follow-up either. Just see how the guy's doing.
Hey, how's Johnny doing at a soccer game?
Yeah, hey, Johnny.
I know little Johnny went to a soccer game. Did they win? Oh, they
Yeah.
lost? And get them next time.
Yeah.
You know, what are you going to do?
Yeah.
And then you chop it up for a couple seconds, and then you're off the phone, and then I'm calling back in 2 days. You know what I mean? That they like that. And then that also puts it in their brain. Like, this dude didn't just say whatever the last guy who called me said. Like, this guy's called me 5 times and only mentioned financing once. Like, what's going on with this guy? What's going on with this company? And they get interested, you know what I mean?
If a client, never really take what a client says to you for word. I said that a little earlier, but even like in the sense of following up, like a lot of them will try to shush you off the phone, maybe on the initial discovery call, be like, call me in 6 months, call me in 7 months, call me in 8 months. And if you end up doing that and you wait the 6, 7, 8 months, you'll end up seeing 2, 3 new lenders in their bank statements. They got funded 2 or 3 separate times, and you feel like an a-hole because you should have listened to Boss Frankie and stayed on the guy. So anything that they say, we always say cut it down like in half. And but if it's 6 months, like you got to cut that even down more, like a 6. Like call him in a month. You know what I mean? Like he's not going to want to. Yeah, exactly. He's not going to want to hear from you the next day. No. You know, maybe not even the next week. And it's hard for us to even sit here and tell you and teach you this. It's just got to be a gut feeling of yours. You have to like hear it in the guy's tonality. If he's kind of just shoving you off, call me in 6 months. Like that's a guy you should follow up with in like a week. Another thing is that these guys are getting bombarded by so many phone calls, and you might have a killer phone call, killer discovery call. Guy knows you. You think he knows your name, knows your company. He might. You know, he was calling you Tom. He knows Lexington. Like he's fully aware of it. You sent him an email and all that, and you might call him 2 weeks later assuming he's going to remember you, and he has no idea who you are. So an important thing always is if you have a great phone call with somebody, you need to then follow up with them the next day, the very next day. It's just like marketing. People need to see your ad 7, 8 times before they click on it. These guys need to hear your voice 7, 8, 9, 10 times before you're going to get the sale, before you get the app or bank statements in, because they're seeing so many ads. They're hearing so many other brokers in their ear talking to them. So it's just so important to just constantly just stay in front of them. Another tip as well is always get your cell phone number locked in. You need to do that. Somebody calls you, you don't have the number saved. You're less likely going to pick up that phone call if you have Tom from Lexington saved into your phone. So I make our sales reps literally have the business owner lock the number in. All right, John, great. I got the company information over to you. Now, last thing I'm going to do is I'm going to send you a quick text message. You're going to see the blue pop up. You got an iPhone. I got an iPhone. I'm plugging you in right now as we speak. John's Construction. You know, make sure that you plug me in. Frankie from Lexington. You plug me in, John. You got me? All right, great. I just want to make sure you told me that you were going to... And don't like beat around the bush. Like we all know this guy's getting a lot of phone calls. I know you got a lot of phone calls. You told me this multiple times. Please lock my number, and I want to make sure that you answer me when I call you next. So I think that's a very important tactic as well to stay in front of the clients.
I love that you always say, address the elephant.
Yeah, address the elephant.
It just clears the smoke.
Yeah. It's just like life. Like if something's bothering you with a family member, the longer that you let that build up, it's the worst the blow up's going to be eventually, because everything comes out in time no matter what. And with our industries, you're just going to lose the client. If he's just going to go to someone else, someone who is willing to address that elephant, right? So,
Absolutely.
100%.
Merchant cash advances are a beautiful thing.
They're a very beautiful.
They make
thing.
America move.
Great product.
100%. I mean, it was the most financed lending product for small business owners last year.
Yeah.
So
That
it's-
speaks.
and it's only growing. It's only growing.
You look into any shopping center on any road.
Maybe
at
it'll make
least
the
one
bench quicker.
business.
Few of them have them. I mean, we people who are from our town or our local community, Suffolk County, Long Island. A lot of our guys, they'll go down to like the town of Port Jefferson and talk to the local business owners. There's probably about like 50 to 60 different small businesses down there. We found out that there's about 10 of them that have merchant cash advances, and that's just from going there and them opening up to us about having them.
Yeah.
So I'm sure that there's probably like another 10 that has them, and they just didn't want to. They just didn't want to tell us because financing, it's a touchy subject. You know what I mean? You don't want to be in front of your customers, your employees, and be like, thanks for the financing. You know what I mean? It's more of a private thing.
Yeah.
So
Whenever I get like a secretary on the phone, and they're, what are you calling about? It's Appio from Lexington.
Yeah,
You just
yeah.
have them give me a call.
I don't want
back.
to talk about their business. You know what I mean? You
Yeah.
never really know
not
how
their
much people are
business,
let
yeah.
in. You know what I mean? Like sometimes they don't even tell their freaking wife. Not saying that that's what you should do, John's Construction, right? You should include your wife on everything you do. But yeah, I mean, sometimes that's just a thing. You know what I mean? So
Asking for referrals
that's huge. That's huge.
in
This-
any aspect of selling, no matter your industry,
yeah. And when do you ask for the referral?
immediately
Immediately when?
after you close,
After you close the deal. After they get funded. Why?
because that's when they're the happiest.
Yes, that's when their
Your
endorphin
euphoria's going
levels or your
crazy, yeah.
dopamine levels are at their very highest. They love Tom. They're very happy with his services. Obviously, as long as you provide them a good service, you know what I mean. You ask for that referral right then and there. You
It's
know,
another layer of trust too. You wouldn't ask for a referral for a bad program, for a bad product.
100%. Yeah, and you simply just ask like, hey, John, is there anybody that I could help out the way that I helped you? Is there anybody in your family that owns a business? Anybody you know in your space, in the construction space, that might be looking for financing? I promise you, if the guy's in the construction space, he knows other construction guys. They all sub work out to each other.
got a
The
painter,
restaurant
a
guys,
roofer.
yeah, and a lot of times things run in families too. Like local pizzeria owners, like it's a family bloodline thing. Like his 5 brothers also own, a different Gino's Pizzeria. out on
Johnny,
Long Island.
I was just gonna say Tony, Tommy,
Yeah,
Anthony,
Frankie, Mikey, Paulie,
Chris's Pizza.
Paulie's Pizza, Chris's Pizza, Mikey's
I don't know if I'm
Pizza.
going.
all on the same block.
Yeah, literally.
Family competition.
Yeah, it's true.
Oh, you don't want to go to Tony's.
I knew him since birth. He doesn't know how to make a pizza like I do.
Yeah.
All right. Well,
Great episode.
I
It was a
agree.
really good
Yeah,
one.
this is really good. I hope you guys got educated on what a merchant cash advance is. If you have any questions, just drop it in the comment section below. Either us or marketing will get back to you. Something that we don't do enough is I just want to thank everybody who subscribed to our channel so far. We really appreciate you guys watching
Double
us
thumbs up.
from episode 1 all the way to episode 29. Watching our journey, watching us grow. I mean, for one, this thing wasn't here. Episode 1, we didn't have
These weren't
these
here.
cool high tech
Yeah.
things. I don't think our topics were
this.
really as good. I don't think
we
our
didn't have the flags.
yeah, we didn't have the flags. Our definitely our quality wasn't as good
Remy
of the
didn't have cool
videos.
things, yeah.
yeah. We're really stepping everything up. We appreciate you growing with us, and we appreciate having the fan base that we do. And
Grow
we,
by Lex.
We love you guys. Grow by Lex.
Grow by Lex.
Go by Lex.
Grow,
Lex
grow by
grow
Lex.
with it.
Lex grow with it. Yeah, I like that.
Let's grow with it.
I like that, guys. Episode 29.
Also,
Signing up.
29.
wait.
Said go New York, go New
Wait,
York.
wait,
go.
wait, wait, wait.
Well,
If you're not subscribing, you still watch. I still love you, but you need to subscribe.
Oh yeah, like and
true.
subscribe.
It
You gotta
helps.
start doing that.
it's true.
It helps.
Please
Everyone
like and
signs off
subscribe.
that
Please
way.
like and
Don't forget to
subscribe.
like and subscribe.
It means a lot.
You
It
watched
means
a couple
lot.
episodes. It's the first, second, third
We are
You're
gonna
day.
here by this point.
I'm dropping the
55
question right
minutes
now.
in.
It's true. We are going to be the faces of this industry. I mean, we already pretty much are. We're just trying to put out good educational quality content for people just getting into it, people who are interested in learning about it, people who are knee deep into it and they want to learn from into a firm that knows just a lot more and they're more in depth in their knowledge and their teachings. Or even our customers and our partners love watching this too. So please, guys, really means a lot to us. And with that being said, go New York, go New York, go. Said go New York, go New York, go. Go New York, go New York, go. Said go New York, go New York, go. New York hasn't been the same in a while, guys, but we're coming back. We're coming back.